Arthur, what do you think the year end ranges will be for both Bitcoin and ETH?
So I'm going to stay consistent. $250,000 Bitcoin, $10,000 ETH.
$10,000 ETH. You think ETH can do more than a doubling in 2.5 months?
Yep.
All right, Tom. Tom, you dropped off really quick, but the question is end of year price targets. We got 2 months, 3 weeks before December 31st. What do you think ETH is going to be? What do you think Bitcoin's going to be?
Yeah, but by year end, our target for Bitcoin is 200 to 250,000, and for Ethereum, somewhere between 10 and 12,000 ETH.
Even higher than Arthur. So that's basically what Arthur just said.
I mean, if Tom says it, this is going to happen.
Is that not a little bit fast, Tom? So like I said about this last year of price action, especially Bitcoin over the last 3 years, it's just been slowly incremental up. If you're telling me ETH is going to do like almost a 2.5x in 2 months, to me, that is no longer incremental. That is starting to become closer to a blow off top territory, which I don't want. I want the slow incremental price rise for years. If it did do a 2.5x, wouldn't you be worried about it kind of just being a little bit too fast?
I mean, as you know, Ethereum's basically been basing for 4 years now. Just broke out of the range. So to me, it wouldn't be a blow off top, but rather seeking essentially price discovery at a new level. And then at a time when I think there would be a lot of fundamental things happening next year. So I don't think it's the top, but I'm sure, but it is a big level. Be a big level, but a happy level.
Now, we've covered Tom Lee in the past, a great crypto investor, but here we have another crypto investor and one of the OGs in all of crypto, Arthur Hayes, giving us a price prediction and a target for Bitcoin of at least 200K. We're looking at 10 to 12K by end of year, even with all of this volatility on an Ethereum. And if that were to happen to the two largest cryptos by market cap, then something like XRP could easily hit $5 to even potentially $10 in the same period of time. So the market is issuing us a major signal, and if you aren't paying attention, you will miss it, because right now we are seeing the fear and greed index sitting at a low of 37. And in a bull market environment where Bitcoin is still holding a long, strong range, which we will cover, you want to be buying when everyone else is fearful. Still, you want to buy right, because if you buy at the wrong time or in the wrong ranges, sometimes it's just quite frustrating to sit in the market and watch your position decline in value when instead you could have bought right. And this is the difference and the reality between really successful investors and everyone else. This is the same thing in real estate markets. I've had the opportunity to meet and know some major real estate investors who do volume to the tune of hundreds of millions of dollars. And their secret has always been, if you buy right, it's very difficult not to make money. So where exactly should you be looking at the chart on XRP? What prices are going to be most pivotal for this asset moving forward? And how should you approach the upcoming weeks? I'm going to be doing a decent amount of technical analysis right now, because a lot of people are worried, man, this sell-off is going to get worse before it gets better. And that this first major bout of volatility is a signal that something is severely wrong. With the US shutdown and Republicans and Democrats in a gridlock, this now is becoming a major issue with 3 weeks of no government funding and something that is going to affect millions of employees, which will inevitably affect the economy. Now, this is on top of the fact that we're already seeing weak jobs reports and the Fed due to make an interest rate decision at the end of this month on October 29th. That's after they get the data on the CPI and unemployment here on the 17th. So we have a lot riding on the line into the end of the year as gold is hitting new all-time highs. And again, virtually every single time this has occurred to this extent, it's a signal that globally we are seeing unprecedented levels of uncertainty. So we have a lot to cover in this video, folks. And one of the smartest things you can do is plan for your future by investing into crypto through an IRA or a Roth IRA. That is obviously not financial advice, but if you're a big believer in crypto, you want to invest in crypto, you want to invest in a bunch of different crypto assets inside of your tax advantaged account like an IRA or a Roth IRA, then check out that link in the description, I Trust Capital. We have so many different assets on this platform that you can trade and self-manage. So check this out.
Do you love crypto, but are you worried about taxes shrinking your retirement nest egg? Here's the deal. Trading and selling crypto can trigger capital gains taxes, eating into your wealth. A crypto IRA fixes that. Per IRS publication 590B, traditional IRA gains like those from crypto aren't taxed until distributed. That's why we've partnered with I Trust Capital, a leading crypto IRA company in the USA, to sponsor today's video. And they offer institutional grade custody for retail clients that want to set up their crypto IRAs for retirement, leveraging top storage solutions like Fidelity, Wells Fargo, and Coinbase Prime to keep your assets secure. To get started, simply click the link in the description of this video, sign up for free, and fund your account with cash. They also offer 401k rollovers or crypto transfers, and you can trade 24/7 with just 1% transaction fees and no maintenance costs. As always, I'm not a CPA or financial advisor, so consult one for tax advice, and we do earn a commission if you sign up using our link below to fund your crypto IRA account, but that helps support value-based videos like this. And I Trust Capital already has over 200,000 crypto IRA accounts and over $14 billion in transactions, proving they're trusted by smart investors just like you. So click the link below, get started now by funding your account today, and let's create generational wealth together.
Hello and welcome back to the Bull Runners YouTube channel. If you're new here, my name is Paul. You can find me on Twitter or X at PauliDeFi, PauliDeFi. First, I want to cover a couple of pieces of news directly from Ripple and then the chief legal officer of Ripple, just to keep you guys up to date. Then we'll dive into the charts. I'm really going to be focused more in on the charts with a bit of news as well. But Ripple recently posted this post talking about the biggest challenges to keeping stablecoins from becoming global money. Now, Ripple itself has their RLUSD stablecoin. We've already seen that the applications for stablecoins are going to continue to grow and expand over the next decade. That's a given. This is one of the major reasons our treasury is so bullish on stablecoins, because stablecoins will be the biggest buyers of US debt, which will ultimately keep the dollar in a major position of power if all around the globe people access digital currency and would rather hold the dollar over their own fiat currency issued by their governments, considering they're typically more inflationary than the dollar. The dollar will remain in power if stablecoins are continued to be used through all sorts of applications like real-world assets and more. But then they made this post about how stablecoins are still facing some issues. And one of those major issues that the stablecoin market and crypto is facing is not the fact that we already have the Genius Act, but apparently, and we've already talked about this in the past, but just to keep you guys up to date, a coalition of global financial associations, in other words, bankers and those who are funded by bankers, has recently submitted a letter to the Basel Committee on Banking Supervision to consider a pause and recalibration of the crypto asset exposure standard. Now, their argument is that this could effectively push growing and innovative sector to operate outside the regulated banking system, undermining the goal of comprehensive financial stability. But at the end of the day, we've already learned that a lot of these committees, subcommittees, and anyone who's funding them wants to slow crypto down. I also understand that there do need to be some solutions in place to not affect our trust in these stablecoin issuers, which is why RLUSD and Ripple have gone to such great lengths to have the right regulatory procedures in place. Now, in the case of their stablecoin, okay, and what they're recommending is the fact that we need real world use cases, which are already here. Interoperability needs to be the first principle design. In other words, stablecoins need to be interoperable across different networks, okay, or different tokens, if you will, issuers and jurisdictions. Regulatory harmonization is the biggest barrier and opportunity. In other words, we don't need any walled garden type systems, and this would limit fungibility, which again, when we're talking about NFTs, right, in the past, these are non-fungible tokens. Well, dollars need to be fungible. $1 always needs to be able to be traded for another dollar, and they need to be of equal value. Stablecoins should be boring, which is what creates stability in the first place. And ultimately, if we're always arguing over everything when it comes to standards and different definitions, this is going to delay global usability and ultimately adoption. And because stablecoins are so important to the entire global ecosystem in the future of how things are going to run in a new financial system. If we don't get clear about things, then you're going to continue to have a lot of different stable coins in different jurisdictions doing different things, and this doesn't create for one cohesive environment. Now, I get it. We do want competition. We don't want one or two or three players running the entire world, but that's usually what happens anyways, and arguably it's better for scale. Next up, we have Stuart Alderodi, the chief legal officer over at Ripple, talking about how when a network is open and permissionless, no one sits at the center deciding who can participate, validate transactions, or build on top of it. This is truly what most networks should be. This is actually what the XRP ledger is, and a lot of people always make the complaint, well, XRP, or better yet, Ripple, has a CEO. Yes, that CEO is in charge of the business of Ripple, and one of their largest portions of their business is the XRP ledger, because XRP is the largest asset on their balance sheet. At the end of the day, he can't stop anyone from participating, validating transactions, or building inside of the XRPL. And so he reposted this statement from the National Cryptocurrency Association, stating that you've probably heard the phrase, Bitcoin doesn't have a CEO, which is why some people like it, and that's their argument to stay away from everything else. It's true, and it highlights the independence and neutrality of open blockchains. But it's not only true for Bitcoin. Tokens such as Ethereum, XRP, Solana, and Cardano all operate on public and permissionless networks, meaning anyone can build on them, and none of them have a CEO. I would also mention, though, it's important to note that although Bitcoin does have one very large holder in the form of Satoshi with 1 million tokens in that wallet, many people theorize that he's likely dead because not a single one has moved and may never move. Now, there's a lot of theories on who created it, how they created it. I think at the end of the day, they're all just theories. And unless we see one Bitcoin in that wallet move, we can leave it at that. It's just theories. And that Bitcoin is going to continue to grow over a long, sustained period of time. But when it comes to Ethereum, XRP, Solana, and Cardano, the founding teams are very well known. Everyone knows who they are. Everyone knows that these people have a ton of their tokens in their wallets. And so that's where it can get a little bit dangerous. Let's say Ethereum one day decides, or the foundation, or Vitalik Buterin decides to sell a boatload of Ethereum because he's extremely rich. And although he already is, there's no reason that if these price predictions and targets are hit, he can't become richer. The same is true for XRP. Yes, it's in an escrow, but that escrow is released every single month. More often than not, Ripple's being smart, they put it back in the escrow. But that doesn't mean that at some point in time, they're not going to act in the best interest of their shareholders, which is exactly what the prior chief technology officer, David Schwartz, has stated directly on X and Twitter. So we do have the receipts. I've covered that in the past. At some point in time, Ripple will sell some XRP when it comes out of escrow, which is going to create sell pressure. And that's probably the major difference that people really think about when it comes to Bitcoin. But in general, I think it's better that we have real people working on these programs and platforms to improve them. Whereas Bitcoin, because it's so decentralized in so many different ways, it's actually very difficult to get anything done on that network other than treat it like what it is. In this case, it's just a digital form of gold. But there's a lot more room for growth here because these are more like companies, even on permissionless networks. Now, that said, I think what is currently leading off to our short-term sell-off, actually after pumping or rallying off of that major volatility and dump that we recently saw, is just the fact that there's a lot of uncertainty moving forward, considering this article from the Wall Street Journal talking about how, yes, we have weak jobs, even though we have growth, and ultimately the outlook is a bit shaky, whereas all the economists, which, by the way, I never really trust them anyways, they're all like the weatherman. More often than not, they're wrong. At the end of the day, they're all over the place. And so this is going to lead people to take the only action they know how to do in markets when they are uncertain, which is sell. Just get out. Wait until you actually see the dust settle. So I'm not going to show you this video, but essentially in this video, Secretary of the Treasury, Scott Bessent, stated that going into the third week, he believes that the shutdown may start costing the U.S. economy up to $15 billion a day. And this is the decision the Democrats are making. Obviously, he was appointed by Trump, so he's pro-Trump, which I don't want to get political, pro-Trump, negative Trump. Democrats are going to blame Republicans. Republicans are blaming Democrats. It's a tale as old as time. I am calling for the moderate Democrats to be heroes and to reopen the government for the American people. Now, the reason this is all occurring is because the Republicans are currently accusing Democrats of demanding $1.5 trillion in partisan spending, while the Democrats criticize GOP cuts to healthcare programs and expiring tax credits that could double premiums for 22 million enrollees. And I'm going to be honest with you, at this point in time, I think the truth is somewhere in the middle. And at the end of the day, all of these politicians are going to eat on a massive bill like this. So now let's dive into the charts and see what we can find out about what this market is telling us is probably going to happen next. What we first notice right here is that we have a decent amount of support between $108,000 all the way down to $107,000. And on virtually any Bitcoin chart you check, it doesn't matter the exchange, this is the long, strong range we're trading in. So the resistance is going to be at about $124,000. We had a major bull trap, major volatility to the downside. Then we got bought right back up and held above the 107, which leads me to believe that we are trading in a Darvis box range. So that said, if Bitcoin can maintain the current price and stay above about $108,000 to $107,000, things should be looking good and up. And if that prediction from Tom Lee or Arthur Hayes remains true, we are actually going to see a very strong end to the month and potentially even to the year. So if this occurs with something like Bitcoin and we continue to see dip buying, then I do believe XRP is going to follow, but XRP is looking relatively weaker right now, currently below its range support. And yes, we saw a descending wedge, but for quite some time right here, we had a little box trading range as well, where we saw resistance at about 312. And I was consistently saying that we need to break above that range in order to see major new bull market territory. Instead, this market broke down really hard. We saw, let's see here, about $200 million sell off on Kraken, which caused a 50% dump, which means truly some of these markets, even though they're multi-billion-dollar markets, and in this case over 180 billion at one point in time, they're still prone to low levels of liquidity depending on the exchange, which can cause massive bouts of volatility, and a lot of people are going to get wrecked if they're on leverage. Currently now we are below the $2.70 range, and so I would like to see Bitcoin start to rally a little bit. I would like to see XRP back above 270 before I buy, even though now we are trading right at that support, which is 240, because the reality is this is officially a new lower low in a downtrend. We've had a series of lower highs, and now we have our very first lower low. So I'd personally rather have confirmation, not add to my risk by buying any more dips here. And instead, I want to focus on a break back above our range resistance, which is going to be about 274 to 275. Now, from the perspective of liquidations, even on Bitcoin over the 7-day time frame, we have far more people that are short to the tune of 12.5 billion versus about 5 billion long, which means right now the bears are in control. And I can go ahead and look at XRP on that 7-day time frame, and it looks to be relatively similar. We have far more leverage to the short side than we do to the long side, which leads me to believe that we're likely going to go a little bit lower. I don't know how much lower, but XRP probably needs to hold somewhere in this range between 240 down to like 225 at the lowest, and Bitcoin would need to hold at least above 107 in order for me to remain bullish over the upcoming week. So although I do like buying dips and I do believe we're still in a bull market, I don't like to add to risk when we're not seeing new highs. I like to buy into strength and new highs because that's an indicator that we're ready to start rolling, instead of buying weakness into a potential breakdown, which only turns into a loss. And so that is it for the video, folks. If you enjoyed it, be sure to subscribe to the channel and also check out Altcoin Pro. If you're wanting to learn how to do technical analysis more like a pro, you can join me on our live Tuesday technical analysis calls, and our next call is on the 21st, where I can teach you exactly how to use all sorts of indicators and even where to set stop losses so you can really reduce risk and make the most out of the end of this year if we continue trending to new all-time highs. Thanks so much for watching this video, folks. All you got to do is go to altcoinpro.com. When you do, you'll land on a page like this. We still have amazing retention through the end of the year, and even with all this volatility, because we're doing a really good job of helping all of our customers play the market right and arguably earn more than they spend to be here. So I look forward to seeing you on the other side, and I'll talk to you in the next video. Goodbye.